So you know what Forex is, and you know what is being traded, and how you can create a trading platform, register with a broker, how you can maximize leverage, and also how much you expect a broker to charge for every transaction. And of course, you know your risk, your money management, and how to throw in those lot sizes. So here's the next question you're asking. How do I translate all of this into profit? Good question. That brings us to today's class. Types of orders and how you can place them. My name is Gloria Adelia, and popularly known as the Pips Grabbing Chick, and today you will learn the different types of orders in the Forex market. Congratulations, you are moving forward in your trading class. So today we're talking about orders. What are they? Remember we said all you do in this market is buy and sell. So you either buy or you sell. You buy, you sell. You can't buy and sell at the same time. Like I see some people's accounts and they have USDs buy, USDs sell, like together. That is you shooting yourself on the knee, right? You don't want to do that. You are either buying or you're selling. So for every transaction, you are in a buy good or you're in a sell good. So that means there are basically two types of orders. Buy orders and sell orders. That's just what it is. Buy orders, sell orders. So you come to an instrument. Which of these instruments have you practiced? Which of these have you been interested in? Which of these have you been looking at? Pick that instrument and say, I want to buy this today or I want to sell it today. That is you placing an order. So the minute you make that decision, you go to your demo account on your MetaTrader 4, you click it buy, you click it sell. So these two orders are simply called market orders. So the minute you go and you just click buy, that's a market order. The minute you go and you click and sell, that's a market order. Another type of order is the pending order. So you've just learned how to place a market order buy or a market order sell. So it simply means that you're buying at the current market price. So if the current market price is $1, you are buying at that price. So the broker takes our spread, you are in the market at that exact market price. So it's called current market price. You're entering by market. Some brokers will say buy by market, or some say sell by market. So you are entering at the exact price that the market is in. And remember, as anytime the market is open, there is always that fluctuation in price. Market always go ping, 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 ping. So if there's that continuity, is at 0.01 before, then it moves to 0.02, then drops to 0.01 and goes to 0.05. So there is that, up and down movement. So it is that up and down movement that you want to profit from. So you taking price at market price, simply you taking at the available price that it is currently quoted. Okay, so that's buy by market or sell by market or instant order. Whatever English you want to call it, you're just entering at the exact market price. The next type of order is called the pending order. The pending order is that you're not buying at that market price. You're waiting for a better offer, waiting for a better price. So say you see this instrument, for example, you see it at a certain price. Say you see it at 14.487. You don't want to buy it at that price because buying it at that price for you would be high. You rather wait for it to get it at a low price. Now, waiting to get at a low price, say you estimate that the market will drop to this point. By the time you begin to analyze the chart and understand all the technicalities of market structure, you'll begin to speculate price, 2,000 pips ahead, all of that. So you can say, okay, I don't want to take it at that price, I want to take it at this price. So that decision will now help you place a pending order. And what are the types of pending order? The pending order are split into buy stop, sell stop, or buy limit and sell limit. So they're split into two, basically. Stop orders or limit orders. So like I said, you either buy or sell. So the pending order is split into two. So you're either placing a stop order or you're placing a limit order. We're going to explain that in some real minutes, okay? So what did I say? I said you're placing a pending order because you want to get price at another price. You don't want to enter at the current market price. You want something better. Because that's what the whole trading is all about. You entering at the better price, right? Some people say buy low, sell high. Like that's just basically fundamental. The market is low, you buy, it's high, you sell. It's low, you buy, it's high, you sell. That is fundamental. So you're saying, oh no, I don't want to buy at 14 I want to buy at 13. Then you wait until the market gets to 13 before you buy. Now, are you going to sit on the chart waiting until the market gets to 13? No, the broker has made it simple. How? By you creating a pending order. So the pending order is that at broker, you tell your broker, I don't want to buy at 14.48. I want to buy at 13.37. So how will you place that order? You go to your MetaTrader 4, you click on the instrument, United States dollar South African rand, and the place where it says buy by market, you click on it. There is a place where it will show you another offer, that is you setting a buy limit. Alright, so if you're looking to buy, it will be you setting a buy limit. So what's a buy limit? A buy limit, or what is a limit order? So I'm just going to define it so that you know that it goes for buy and sell, okay? So a limit order is you coming to wait for price at a lower point. Say you're looking for buys now, waiting at a lower point. You're looking for sells, waiting at a higher point. You know the market sells from the top to the bottom, and it buys from bottom to top. So if you want to sell, for example, say price is here, you say, oh, this thing has moved, I don't want to sell from here, I want to go and wait for it at the top. So you go at the higher point and wait for it. So that's a limit order. It's saying, I want this market to pull back, go all the way back to this point, then I sell from here. So that's a limit. So setting at a different price from the original price. So if it's a sell market, you set it some pips higher than the current market price. If it's a buy market, you set it several pips lower than the current market price. Okay, so that's what a limit order is. While a stop order is that the market is moving. I don't want it to miss me. I want to join somewhere. So the market has been moving from 1366, it moves to 1394, it moves to 1499. So you're like, okay, you know what? I think this thing seems to be moving. So why don't I just come and wait for it here? So you can wait for it here, and then you say, the minute the market gets to 1448, let it take me in. So that is one of the orders that most traders place when they're trading the breakout strategy. That's to say, the minute the market breaks out of this zone, let it take me in. And I'll tell you for free that the stop order is not recommended. The win rate is quite low, so I don't really recommend stop orders. I'll prefer buy limit orders, okay? But then again, the stop orders has its advantages, because I know a lot of traders who trade breakout strategies, they place a stop order and they have take profit that is very, very close to it. So the minute the market breaks out, it breaks out into profit, takes them out in profit before it pulls back. Alright, so if you're gonna place a stop order, it is best placed when you're trading the breakout strategy. Place it just at the point of breakout. Take your pips, 10 pips to 15 pips out of it, and then you're out. So the minute the market does that sharp break, before it's pulling back, you're already out. So stop orders don't really have that high win rate, but limit orders have higher win rate in that the market does a considerable amount of pullback, a considerable amount of drops before it now begins to take you for the jolly ride. The same also for the sell limit. Does a considerable amount of pullback or rally before it begins to drop and take you for that sell. Okay, so that's what the orders are. We have the buy by market order, or the instant execution, where you're entering at the current market price. And we also have the pending orders, where you're either placing a limit order or you're placing a stop order. So what's a limit order? You going to take it at a different price. Most times it is lower than the current market price, or a bit higher than the current market price. So if there's a sell limit, you want to take it higher. So if the current market price is at sell price is at $5, you want to say, no, I don't want to sell at $5. I want to sell at $3. So you wait for it at $3, knowing that the market is going to do a pullback. All right. By the time we talk about next level trading, we will talking basics of market structure. We will know what the pullbacks are and all of those things. All right. So you wait for that pullback. So you're selling at $3. And if it's a buy limit, the minute the market has done a push up, you know that there's going to be a pullback. So you wait for that pullback. So you cannot wait for it at a lower price. So the fundamental principle of a pending order is buy low, sell high. All right. So sell high, sell at the highest price possible. So that the market has dropped all the way to the low price, 15. Don't go there. Wait for it to pull back to 16 before you sell. All right. I think I used the wrong analogy before. So let's say the market has dropped to 15. Wait for it at 16. So that is you selling at the best possible high price. And for the buy limit, buying at the best possible buy price. So that's what limit orders are. Limit orders have higher win rates than stop orders. Like I said, the stop orders are often used for trading breakout strategy because the minute price breaks out of this, like I have a structure here waiting. I have price anticipated to drop all the way to 13, but then I take my buy from this point and write it out. While some traders say, I don't want to, what if it gets in and continues to drop? I don't want to do it. I want to wait until I see that breakout. Then they set a stop order, and if it takes them in, they're out like that, and the market continues to ride while me waiting for the pullback. So all of these decisions you make as you advance in your trading. So don't get worked up. Just take it pace by pace. If you have any questions from this class, do send an email to winningwithforex2.0@gmail.com, and I will answer all your questions. Thank you for watching. I'll see you again in the next class. Have a good one.